I haven't had a chance to check it myself. I will look into that. So I'll see if I can come back to you with an explanation of that. 352.05 to be exact. Well, very good. Shoot me an email about that to remind me. I do have a lot of other things to catch up on, but I am curious about that. It does because it's not obvious to me uh, how exactly that optimization is arrived at. But often when I am optimizing for a couple, particularly if the software is giving fuzzy results, I will have to play around and put in slightly lower and slightly higher amounts, uh, and this is a general principle in tax, not just for pension income splitting, but put in slightly lower amounts, slightly higher amounts until you minimize, maximize until you're getting the very most back. Okay, you sent one yesterday. Excellent, Valerie. Thank you. Yes. I was teaching all day yesterday, you see. All right, good. All right. Any other questions on 11-1 other than that? If not, and I think we reviewed the goals from chapter 11 last time, let's move over to 12-1. In terms of tax tips, Karina, it's a little tricky with the Edmondsons. The obvious thing to me that I would suggest is to have a chat with them about the stamp collection and explain why that wasn't they weren't able to claim the investment expenses. Uh, but as tax preparers, we have to be careful there because we can only talk about the tax implications of something rather than the uh, investment side of things. What I might inquire about is if he was interested in running it as more of a business, selling and reselling stamps, in which case he would be able to claim expenses as business expenses. In terms of their pension income splitting, I would just want to make sure that they understood clearly what had happened there and if any uh, changes are going to be coming up. And I would look at their charitable donations. So it might be more advantageous for them because notice while they did claim more than $200 in the year, they only claimed just over $200 in the year, so only an extra 150 or so. So they would likely see a significant benefit by saving it up for 2 or 3 years and claiming it all at once. Again, sometimes that's just too much trouble for people relative to what they get back, but you really would want to be maximizing the amount where you're getting 29% back as opposed to 15. All right, so for 12-1, let's have a look at that. And we'll get as far as we can with it, and then we'll uh, continue it next time. So for 12-1, so this is for Anil and Sri Kumaran, who are married and have 2 children, Varsha and Ravi. Neither of the children had any income, nor are they infirm. So here we're going to be looking at a child care scenario, I suspect. So Anil was unemployed in the early part of the year and now works as a machine operator for W.S. Robertson. We have his T4 and T4E slips with the problem. Sri works as a technician for Bell Canada, and she has received some Canada Child benefits and $45 in dividends from Bell Canada, which is on a T5, so we don't have to manually calculate her taxable amount or anything like that. In mid-March, she contributed $500 to her RSP at Wealthsimple, and in early July withdrew all the funds in her RSP under the Home Buyers Plan to make a down payment on their first house on Silver Springs Road. She received a T4 RSP with $14,027. Shree's RSP limit for the year is $37,600. The house on Silver Springs Road is their first home. They have always rented until this purchase. They purchased the home on August 1st, 2024. So notice this would make them eligible for the BC Renters Tax Credit. I will probably go back and do this as an example of that for Chapter 14. Don't worry about that right now. But notice we always want to be alert to that possibility if someone is renting for 6 months or more of the year. Now, for the part of the year when they were both working, the Kumarans paid Mrs. Sylvia White $2,000 in childcare expenses for Ravi and $3,000 for Varsha. They both live in a census metropolitan area, have no foreign property. They are not Canadian citizens. All right, so here we have the T4 for Anil for 16,000 and a T4E for 7,103. Again, notice only 10% has been taken off in tax. For Shri, we have our T4 from Bell Canada for 73,500. So obviously she's going to be the higher income taxpayer. And then we have her withdrawal under the home buyers plan of 14,000. Notice that's in box 27, so it's not going to be included in income this year. And then the $45 in dividends from Bell Canada. So we're going to answer the questions and then have a look at T778. All right, so questions-wise, so what personal amounts can be claimed by Anil and Shri? The basic personal amounts, exactly. So 15,705. Now for the spousal amount, is Anil's income low enough that Shri could claim a spousal amount? Let's have a look. So Anil, let's look at his income. So Anil, his income here. So his income for Anil, we have the 7103 for the T4E, and then 16,000 for WS Robertson. So his income is going to be higher than the basic personal amount, and that means Shri will not be able to claim a spousal amount. Okay. Now, does Shri have to report the dividends from Bell Canada? Good. On line 12000, it's on a T5, so it would need to be reported. What about the Canada Child Benefit? Does she need to do anything with that? Good. It's not considered income. It's a refundable credit. So philosophically, then, it is post-tax money. It is not considered income. Can she deduct the $500 RRSP contribution that she made? Why or why not? This is an important point here. It is 114 days, right? This means it stayed in the account over 89 days. Therefore, she will receive an RSP contribution receipt for it, and she can deduct the RRSP. If she had withdrawn it within the 89 days, she would not be able to withdraw it under the home buyer's plan. And if she did withdraw it, she might not receive a contribution receipt for it. Right? That is the important thing to remember with RSPs. Any contributions you made need to stay in the plan a minimum of 90 days before they vest, is the investment term. And then you can claim a deduction for them. Simply withdrawing it in the same year is not the actual test. As long as it is 90 days or more, it is okay to withdraw it in the same year. And withdrawing it for the home buyer's plan or any other purpose has no effect on whether or not it can be claimed as a deduction. Right? The deduction is when the money goes in. The home buyer's plan is when the money comes out. So she can claim the $500 because it went in and it sat in the plan for 90 days. And then after the 90 days, she can withdraw it or not for the home buyer's plan or not. And that has no effect on it. Yes, she can. This is the whole reasoning behind the home buyer's plan. You can put your money into your RSP, claim a deduction for it, and then providing you let it sit in the RSP for 90 days, then you can pull out the money for the home buyer's plan. What you cannot do is just take your down payment, park it in your RSP for a couple of weeks, and then pull it out and get a deduction. It has to sit in there a minimum of 90 days. Home buyer's plan withdrawals, you file a specific form with the bank to let them know you're doing a home buyer's plan, and then they will issue a T4 RSP indicating that the withdrawal was made under the home buyer's plan. You cannot just do any old withdrawal from an RSP and retroactively declare it as being a home buyer's plan withdrawal. You need to do it specifically using specific forms with the bank so that the bank knows that it's a home buyer's plan withdrawal. All right, we'll do our next few questions, and then next time we will look at the T778 as well as 12-2. It is reported on the tax return on Schedule 7, Karina, and we will look at their Schedule 7 next time. Remind me, and I'll show it to you. We've looked at examples previously, but I'm happy to show it to you again. Okay, now just 3 more questions, and then we will wrap up for the evening. So as first-time home buyers, are they eligible to claim the home buyer's amount? If so, how much can they claim, and who should claim it? Good. So 10,000, so they can claim it, and they can split it however they like, so long as it's 10,000 total. So this is another important point. It doesn't have to be 50-50. It doesn't have to correspond to their ownership shares. They can split it however they like, whoever it's most advantageous to. Notice that because it's a non-refundable tax credit, they get back 15%. So each dollar that is claimed returns 15 cents. It doesn't matter who claims it. No matter who claims it, they're getting the same amount back, providing that person has enough income in order to use it. Who can deduct the child care expenses, though? That's a different question. So who can deduct that? Anil. He has the lower income. He has to deduct them, in fact, because he has the lower income and none of the other conditions apply. Although he was collecting employment insurance, that did not mean he could not care for the children. He wasn't in a hospital or something. And lastly, of course, just you know this, but just to remind everybody, during the year they bought a house. Therefore, they must have had moving expenses. Under what circumstances would these expenses be deductible? Exactly. If they moved for work, if they moved at least 40 kilometers closer to a new job, right? New work or new business or new school that where they were receiving taxable scholarships. Exactly. And notice, right? And neither of them is disabled, so they wouldn't be claiming the moving expenses as the medical expenses, which we've discussed previously. If you're claiming moving expenses as medical expenses, though, they're not deductible. They're a medical expense, which is a tax credit. All right, good stuff. New job or to search for a new job. Good catch, Inyeka. Yes, so the new job doesn't have to exist yet, although it needs to appear within a reasonable length of time. Okay, so we will look at the T778 next time, just because it's going to take a little time and I don't want to keep you here unduly late. So just to wrap up then, here are our main points from tonight's session. So we now know how to talk about the tax consequences if a change of marital status took place in a year. And we know how to determine when support payments are going to be taxable to a recipient and deductible by a payer, and how to enter the correct information on the tax return. And we know how to determine the eligibility for claiming adoption expenses. We know how to summarize the rules and limitations around childcare expenses and deducting them. And we know how to complete Form T778 for childcare expenses and or another person, taxpayer and or another supporting person, depending on the situation, and how to claim that deduction on the tax return. And we had a look at the various complicated situations which can result when marital status changes during the year and the effect of those on a taxpayer's eligibility for claiming various personal amounts and refundable credits. We are, of course, going to do chapter review problem 12-2 next time. I will probably do it at the beginning of the session so as not to disrupt our discussion for chapter 13. We will finish off 12-1 and 12-2 at the beginning of class next time, so be here at 6 o'clock sharp. Also for next time, please do self-test number 5, read chapter 13 in the ink doc. Chapter review problem 13-2 is optional. I'm going to have a look at that. We will probably do that at the very end of class, depending on time. But we will probably do that depending on how much time we need with the rest of it. The thing to stress, though, is that 13-1 is assignment number 2, worth 20% of your final mark. I know you guys know this, but people who have downloaded this online may have missed this important point. So 13-1, assignment number 2, everybody, is worth 20% of your final mark. It is assigned today, which means you can officially start looking at it and start working on it. It will be reviewed at the end of class number 16, and therefore the assignment is due prior to us reviewing it in class. If your computer explodes, if your dog eats your modem or something like that, there is some kind of personal life event, I am expecting to see an email from you guys explaining why and the situation, and then we will take it from there. If your computer internet dies at a crucial point or something like that, and you need tech support, there is contact information in the learner guide. Have a look at that. Do not email me at 3 in the morning because I'm not going to be able to help you directly with that side of things. Okay. So for the dates for us in the schedule, and those of you watching online, bear in mind this is the schedule for my class, which is a Monday, Wednesday class with a September 10th start date. Your class will have a different date, but for us, remember, students, I've sent you out the schedule. You have this in your email somewhere. So the due date for assignment number 2 is November 11th, but obviously November 11th is a holiday. What I really mean is it is due before class on November 12th. And remember, when I download your marks, they will be your assignment results. They will be time stamped with the date they are completed, so it will be obvious when it is completed. So long it is submitted before class, it will be fine. In just to ensure, so we say November 11th, the due date is always going to be the day before the class, but in practical terms, so long as it's in before we review it in class, that's the main thing. No, assignment 2 is not due yet. No. We haven't done chapter 13 yet, right? Assignment 2 is going to incorporate things from chapter 13. It is chapter review problem 13-1. So we are going to do chapter 13 in class, and then you are going to have the following Monday off. All sessions will have a class off in order to make sure you have some time to work on the assignment. You can look at it in the textbook. Yep, you can access it right now. Do not open it in ULearn. Do not say open the assignment or the grades in ULearn, because when you open that, it starts a timer, and then you have to put in the answers. So 13-1, just like assignment number 1, it is a chapter review problem. So you're going to do the chapter review problem on your own computer like you would any other computer chapter review problem. And then once you're finished that and you are ready and you have 3 hours of time set aside to enter the answers in ULearn, then and only then you do ULearn. But none of you should be doing that until we have done chapter 13 in class, because some of the things we talk about in class will be important for the chapter review problem. And you, your gender, if you miss some of the class, do do let so that I can make a note for the attendance, but um, obviously, attend as much of the class as you can. We are going to be recording the session, so you can listen to it afterwards. And then after you've listened to the recording, you can send me an email if there's anything which is still unclear, right? But yeah, if you are at a webinar, or I do believe some students, if it's an information session about working with H&R Block that coincides with our class, then I absolutely understand. But just as a general best practice, if you're going to be missing part of the class, do send me an email just to let me know when I'm keeping track of things. All right, good stuff. And I have probably received your email, Humaira. I haven't necessarily read it. I will be responding to those emails. Since I also get a class off, this will be an opportunity for me to enter marks and catch up on emails and things, but I will try to catch up on emails before the weekend, say. Mm-hmm. Okay, thanks, Valerie. If you want, Valerie, just shoot me an email about that and let me know. All right. On that note, I think we're starting to get into internal class business here, which will be of less interest for people who have downloaded the the session online. So for those of you online, remember next class, chapter 13. After chapter 13, then you have assignment number 2. Otherwise, thanks for hanging in there, all of you online. Have a good night. We will see you next time. And that's it for this recording.